Hey everybody, and welcome back to Talk Tickers,
Yeah, welcome back.
the show where we listen to these earnings calls so you don't have to.
Exactly.
And today we are diving deep into Eastern Bankshares, ticker EBC,
EBC, yep.
Q4 2024 performance.
These guys are not messing around.
Yeah, and let me tell you, this bank is not playing around.
Yeah,
They just pulled off a major financial shakeup.
that's right.
Yep.
Big moves while everyone else is kind of tiptoeing around,
Yeah.
with the economy, how things are going. Eastern's making some bold moves, and we're going to talk about that $1.2 billion investment portfolio repositioning.
Yeah, we're going to get into all that.
Talk about aggressive.
Okay, so
That's pretty.
let's unpack this thing, right?
Yeah.
First, the headline numbers, right?
Yep.
EBC's operating net income jumped 37% compared to last quarter, landing at $68.3 million.
Huge jump.
Their net interest margin, so that's the difference between what they earn on loans and what they pay on deposits, widened by 8 basis points,
8 basis points is
hitting 3.05%.
that's a big move.
And to put that into perspective, a basis point is just 1/100th of a percentage point.
So these are meaningful changes.
Yeah.
What I find so fascinating here is they're achieving this really impressive performance while strategically managing their deposit costs, which actually decreased
Yeah.
13 basis points to 169 basis points in the quarter.
Wow.
And on top of all this, they're, giving back to the shareholders through share repurchases and a dividend increase.
Yeah, it's like they're firing on all cylinders right now.
Yeah, exactly.
Now, odd about that,
$1.2 billion. man.
$1.2 billion investment portfolio shakeup.
Yeah.
They sold off a chunk of low-yielding securities
Yeah.
and are reinvesting that at current much higher rates.
I mean, it's a calculated gamble,
Yeah.
It'll cost them about $200 million up front, but it's projected to add $0.13 to their operating earnings per share, or EPS,
Yeah.
in 2025.
Yeah.
So which begs the question, is this move too risky, or is it a brilliant play?
Yeah. I mean, that's what we're here to try to figure out, right?
Yeah, exactly. We'll
Yeah.
get into the nitty-gritty of their logic, and we'll also explore, their loan portfolio, particularly those investor office loans that I think everybody's watching closely.
Yeah, that's the big question mark right now.
Yeah.
So get ready, folks. I think we got some serious insights coming your way.
Oh, yeah.
We're going to break down the numbers, analyze the strategies, and leave you with a thought-provoking trade idea
Of course.
and a reminder.
Always a reminder.
This is not financial advice.
Yeah.
Stay tuned.
Stay tuned.
One key thing to understand is that Eastern Bankshares is in a very strong financial position.
Yeah, they're sitting pretty.
Their CET1 ratio, which is a measure of their capital strength, stands at 15.7%,
That's way above what's required.
way higher than regulatory requirement.
Yeah, they got a nice cushion, a nice buffer.
Yeah, and it kind of indicates they have a solid buffer to absorb any potential losses, right?
Right, yeah.
And, they've also set aside a pretty healthy allowance for loan losses at 129 basis points.
Which tells me that they're really being proactive about managing that credit risk.
Yeah, it's not like they're just, throwing caution to the wind
Yeah.
with this investment portfolio repositioning.
No, they've done their homework. They're being smart about it.
It sounds like
Yeah. They're confident.
they've done their homework and are confident in their ability to manage the risks involved.
Exactly. And let's not forget, they had that merger with Cambridge Trust,
Oh, yeah, that was a big one.
which, finalized back in July.
Yeah,
Really solidified their position as the largest commercial bank headquartered in Greater Boston, expanded their footprint in the lucrative New England market.
speaking of growth, their loan portfolio saw a
Oh, yeah.
29% increase year over year.
Yeah, thanks in part to that Cambridge Trust acquisition. Now,
Yeah.
granted, that growth kind of flattened out quarter over quarter, mainly because of paydowns and maturities.
Right.
But they're still projecting a 2% to 4% increase in loan growth for 2025.
So, still looking pretty good.
Yeah, not bad. Of course, they're not oblivious to the fact that, the economy, the rates, that could all present some challenges.
Yeah, there's always headwinds.
Always headwinds.
Yeah.
But, they've got that strong capital position and they're approaching things from a risk management standpoint, proactively.
Yeah.
Gives them some flexibility to navigate those potential headwinds.
Yeah, it seems like they're well positioned to kind of weather whatever storms might be coming.
I think so.
And it's worth noting that their deposit base remains stable in Q4. which is,
It's a good sign,
yeah,
especially with all this competition for deposits out there.
it's a positive sign in this very competitive landscape for deposits.
Absolutely.
Their focus on low-cost checking accounts is really paying off.
Yeah, it is.
With those accounts now comprising 50% of total deposits.
Yeah,
Half.
that's huge.
Yeah. And so,
Like you were saying, managing those deposit costs is key right now, and they seem to be doing it well.
yeah. And, attracting those low-cost deposits is essential, right, for maintaining their profit margins.
Right.
They're also, a leader in wealth management
They are, yeah.
with over $8.3 billion in assets under management.
That's a lot of money.
This segment is a key part of their long-term growth strategy.
Oh, yeah. I mean, it brings in a nice, steady stream of fee income.
Yeah.
And, wealth management tends to have pretty high margins, which is great.
Yeah.
Really helps to diversify their revenue.
Yeah. And as the wealth of their client base grows, so too does their potential for fee income.
Absolutely.
It's like a snowball effect.
Yeah, snowball effect. Exactly.
The bigger it gets, the better it is.
Now, no earnings call breakdown would be complete without talking
Oh, we got to talk about credit quality.
credit quality.
Yeah.
Especially in this current economic climate.
Right. Overall, Eastern Bankshares seems to be in pretty good shape
Yeah, they're looking solid.
with a robust allowance for loan losses and a proactive approach to managing risk.
I mean, there was a slight uptick in charge-offs this quarter, but it was mostly driven by those investor office loans.
Yeah, those darn office loans.
And even then, a lot of that came from those loans they acquired through the Cambridge Trust merger, which
Right.
they already had kind of accounted for.
They had those reserves set aside, yeah.
Yeah, so it seems like their original loan portfolio is still pretty healthy.
That's good news.
Yeah, which is good news. But, everyone's got their eyes on the office sector. Vacancies are still high in a lot of places.
Yeah, that's the elephant in the room, right?
Right.
The office sector.
And they did talk about it. They gave some details on their office portfolio.
Okay.
They're keeping a close eye on those loans, and they're assessing them pretty regularly to catch any problems early on.
Yeah, so it's not like they're just, burying their head in the sand,
No, they're being proactive.
hoping for the best.
Exactly.
Now, before we get to the really fun part,
Ooh, the fun part.
I think it's important to acknowledge that Eastern Bankshares is operating in, it's a challenging environment out there.
Definitely challenging environment.
Right.
Yeah.
Interest rates are still relatively high. Inflation
It's still a concern. Yeah.
remains a concern.
Yeah.
And the economic outlook is, it's uncertain.
It's a bit murky.
Yeah.
It's murky out there.
Murky. There you go.
Yeah, so these factors could definitely impact their performance in the coming quarters.
Yeah, we'll have to wait and see how it all plays out.
We'll see how it all shakes out. Okay, now for
That's the fun part.
fun part, right?
Yeah.
It is time for our This Is Not Financial Advice segment,
Yes.
where we throw out a completely speculative and potentially
Outlandish.
outlandish,
Crazy.
trade idea inspired by
The earnings call.
the earnings call.
Just to reiterate, this is purely for entertainment purposes.
Don't take this to the bank.
And you should absolutely not base any investment decisions on what we say here.
Do your own research, folks.
Right.
Disclaimer out of the way. Let's get wild.
Wow.
Eastern Bankshares is clearly, they're making moves. They're not content to just sit back and wait.
Yeah.
They're actively changing their portfolio, looking for growth.
Yeah, it's like they're playing offense, not defense.
Exactly. They're confident. They're willing to take some risks to get where they want to be.
So for our
This is not financial advice.
this is not financial advice trade idea. How about this?
Hit me.
A long-dated
Okay.
bull call spread on Eastern Bankshares.
Okay.
We're talking way out of the money, like a strike price that's 50% above the current share price,
50%.
expiring in 2 years.
Wow, that's aggressive.
Aggressive, yeah.
But I like it.
So you're essentially betting that their strategic moves are going to pay off big time and drive significant share price appreciation over the next couple of years.
Long-term vision.
This is, it's a high risk,
High risk.
high reward play.
Big reward if it hits.
If it hits, those calls could be worth a fortune.
Oh, yeah.
But if they stumble,
Oof. Yeah.
well, let's just say you might want to have some antacids handy.
I think I need one now just thinking about it.
But hey, that's what makes this segment fun. right?
Exactly. That's the fun part.
Exploring the
The what ifs, yeah.
letting our imaginations run wild.
Exactly.
Remember, everyone,
And remember, folks,
this is hypothetical.
purely hypothetical
Just for fun.
and definitely not financial advice.
Absolutely.
Always do your own research and consult with a qualified
Financial advisor.
financial advisor before making any investment decisions.
For sure. All right, so we've had our fun.
We've had our fun.
Let's shift gears and really dive into the details of their loan portfolio.
Particularly those investor office loans, because that's where I think things get really interesting.
Yeah, everybody's got their eyes on that office sector these days.
Absolutely.
So let's see what Eastern Bankshares had to say about it.
Let's do it.
All right, so let's dive into these office loans.
Yeah, let's get into it.
Just how much exposure does Eastern Bankshares have to this sector? You know, the one that's got everyone a little bit nervous.
Right. Well, their investor office loan portfolio is sitting at about $914 million,
Okay.
which is roughly 5% of their total loan book.
All right, so not insignificant amount.
Not insignificant, no.
And of that, they said 184 million is what they call criticized or classified.
Yeah, which basically means they're watching it closely.
Yeah, like extra scrutiny, maybe some signs of potential trouble.
Right, exactly.
So they gave us the big picture.
Yeah.
But did they give us any details about these loans?
They were a little tight-lipped on the specifics,
Okay.
but they really hammered home the point that they're being proactive. It's not like they're just sitting back and, waiting for something to happen.
Yeah.
They're doing these really thorough assessments every quarter. And for the bigger loans, the riskier ones, they're doing monthly reviews.
Okay, so really staying on top of it.
Yeah, they're on it.
What about those loans that they picked up, that they inherited from the Cambridge Trust merger?
Right, from the merger.
Those seem like they were a little riskier from the start, maybe.
Yeah, there was some concern there, for sure.
Yeah.
But remember, last quarter, they set aside $97 million specifically to cover potential losses from those loans.
Right. They were like, we know these are a little dicey, so.
Exactly. So it seems like they're really trying to be cautious and get ahead of any problems.
So they're not, they're not sugarcoating the overall, challenges that the entire office sector is facing.
Not at all. They acknowledge that vacancy rates are high.
Yeah.
And that the credit cycle, the ups and downs of lending is still kind of in flux.
Yeah, who knows what's going to happen with interest rates and
Nobody knows, yeah.
the economy and all that.
It's a lot of uncertainty out there, and that means we could see more loans going bad.
So what's their plan? How are they going to deal with all this? Any thoughts on maybe selling off some of these office loans to kind of reduce their exposure?
They didn't mention anything specific about selling loans,
Okay.
but they did highlight their strong capital position again.
Right, that CET1 ratio.
That gives them a lot of options.
Yeah.
If they need to make a move, whether it's selling loans, absorbing losses, or something else entirely.
They've got the flexibility.
Yeah, they got the
No,
flexibility.
so it sounds like, it's a bit of a wait and see approach.
A little bit, yeah.
But they're
prepared.
they're prepared, yeah.
It's like they're saying, hey, we know there could be some problems, but we've got a plan. We're ready to handle it.
And that's what you want to see from a bank these days, right?
Yeah, especially
Yeah.
with all this uncertainty.
Or especially in these crazy times, so.
Yeah.
Okay, so we've talked about their earnings,
Yeah.
their investment strategy, their approach to risk management.
We've covered a lot.
What else stood out to you from this call?
What should our listeners really, take away from all of this?
Yeah, what's the big takeaway?
Honestly, I was really impressed with their focus on controlling those deposit costs.
Yep.
Remember how we talked about how those costs actually went down?
Yeah, in this environment.
That's a big deal, especially with rates going up and banks fighting tooth and nail for deposits.
It's a dog-eat-dog world out there.
It is. It really is.
Yeah.
They're doing a great job of attracting and keeping those low-cost deposits, which is absolutely essential.
Yeah, if you want to maintain those profit margins.
Exactly.
Yeah, and it seems like they're doing it the right way,
Yeah.
Not cutting corners or doing anything risky, just good, solid
Fundamentals.
fundamentals.
Yeah.
Solid fundamentals.
And speaking of solid fundamentals, their commitment to growing that wealth management business.
Yeah, that's a
Smart move.
smart move. Long term
Entrepreneur play.
provides them with that steady stream of fee income.
That's not so dependent on, the interest rates or the overall economy doing well.
Yeah, exactly. It's like a
It's like a safety net almost.
safety net, and it also strengthens those relationships with their existing clients.
Right. And it helps them attract new clients
Yeah, who are looking for that one-stop shop
for all their financial needs.
for all their financial needs.
Yeah, it's all about diversification, right? Not putting all your eggs in one basket.
Exactly, spreading the risk.
Spread the risk.
Okay, before we get to our, speculative
Not financial
or
advice.
fun segment,
Yeah, the fun part.
anything else we should highlight from this call?
I think it's important to remember that at the end of the day, Eastern Bankshares is a regional bank.
Right.
So their success is pretty tied to how the New England region is doing economically.
Yeah, makes sense.
So while they are, doing great, managing the things they can control,
Yeah.
they're still exposed to risks they can't control, like, say, a downturn in the regional economy.
Right. There's always those external factors that you just can't predict.
Exactly. So, it's good to keep things in perspective.
Yeah. No investment is completely risk-free.
That's for sure.
All right. You ready to have a little fun?
I'm always ready for the fun part.
Time for our
This is not financial advice.
This is not financial advice segment where we come up with outrageous but plausible
The plausible trade idea inspired by
what we heard on the call.
what we heard on the earnings call.
Yeah.
Just to reiterate, we are not qualified financial advisors.
Right.
This is purely for entertainment purposes.
Don't make any decisions based on what you hear here.
And please, please, please don't make any investment decisions based on what we say here.
We're just having some fun.
All right, disclaimer out of the way.
Let's get crazy. Let's get a little crazy. Eastern Bankshares.
They're playing offense. They're not afraid to make bold moves.
Yeah.
They're not just trying to survive. They're trying to thrive.
like a scrappy underdog
Exactly.
who's, willing to take some risks to win the game.
That's a good analogy.
So for our crazy trade idea,
Hit me.
how about this? A short position on a basket of publicly traded office REITs.
Whoa. Okay.
Those are real estate investment trusts that focus on
office buildings. Yeah.
office buildings.
So you're betting against the office market
Basically, yeah.
while also betting on Eastern Bankshares to kind of come out on top.
Exactly. You're betting that the office apocalypse is going to continue.
The office apocalypse.
Yeah.
I like it.
And that Eastern Bankshares, with their careful management and, their proactive approach,
Yeah.
they're gonna weather the storm better than most.
That's a bold strategy.
Look, it's a long shot.
It is. It is.
Solid.
But it's not impossible.
But if
they manage to, keep those office loans performing well,
while everyone else is struggling,
while the rest of the sector is, kind of crumbling.
their relative outperformance could be huge.
It could be, yeah.
Now, it's not completely implausible.
No, not entirely.
Right. I mean, they're focused on the New England market,
Yeah.
which
It might be more resilient.
might be more resilient than other parts of the country.
Yeah.
And as we said, they're being very proactive
They are.
about managing those office exposures.
So, it's a gamble.
It's a gamble,
A more
but a fun one.
a fun one to think about.
Exact.
Of course, this is all purely hypothetical.
Yeah, don't go running off to your broker
Just a bit of fun.
just for fun.
Please don't mistake this for actual investment advice.
Yeah.
All right, let's bring things back down to earth a little bit.
Back to reality.
Back to reality.
Mm.
Wrap things up.
Yeah, let's wrap up with some final thoughts on Eastern Bankshares. So what's the big takeaway for our listeners? Should they be, bullish, bearish, somewhere in between?
I'd say cautiously optimistic is a good stance here.
Okay.
They're profitable, they're well capitalized, they've got a clear strategy for growth,
Yeah.
and they're really taking that risk management seriously, especially with that office loan portfolio.
Yeah, it sounds like they're not immune to the challenges in the economy,
Nobody is.
but they seem well equipped to handle them.
I think so.
And they're not afraid to make bold moves like that investment portfolio repositioning.
Right.
That's the kind of leadership, that can create real value for shareholders over the long term.
Absolutely. They're definitely a company worth keeping an eye on
Yeah. I'm curious to see how those strategic initiatives play out
over the next few quarters.
over the next few quarters.
Yeah.
All right, folks, that's our deep dive
Into Eastern Bankshares.
into Eastern Bankshares Q4 2024
earnings call.
earnings call.
Thanks for joining us.
And remember, do your own research, consider your own financial situation, your risk tolerance, and never
Ever.
invest based solely on what you hear
On a podcast.
on a podcast.
Yeah, this is just for fun and entertainment.
Until next time, stay informed and happy investing. Yeah, agreed.
Definitely a company to keep on your radar.
I'm really fascinated by
By their performance, how they're doing.
yeah, how they're managing to do so well in this environment.
Yeah, it's pretty impressive.
It's a reminder that even in,
Even in a mature industry like banking,
yeah,
there's always room for, innovation and taking some strategic risks.
absolutely.
Now, before we sign off,
Yeah.
we always like to leave our listeners with something to think about,
Yeah.
a thought-provoking question, something that wasn't really addressed in the earnings call.
Yeah, something to keep them thinking.
To ponder, to chew on.
Yeah, I love this part.
Yeah, me too.
So what's the question today? What's going to keep our listeners thinking about Eastern Bankshares?
Okay, so we know Eastern Bankshares is all about growth, right?
Right.
Organically, through acquisitions, they did a great job with Cambridge Trust.
Yeah?
And they've hinted they're open to more acquisitions down the line.
If the right opportunity comes along.
Exactly. So they've got that appetite for expansion.
Yeah, they're hungry.
So here's the question. What if their next acquisition isn't another bank?
Ooh, interesting.
Thinking outside the box.
What kind of non-bank acquisition could make sense for them?
Well, they're really focused on wealth management, right?
Right.
So acquiring a fintech company that specializes in wealth management technology.
Yeah.
That could be a smart move.
Yeah, especially with all the robo-advisors and all those.
Exactly. It's a growing market.
Yeah.
Give them a competitive edge.
Yeah.
Allow them to offer, more sophisticated tools to their clients.
That makes a lot of sense.
Or they could even look at, acquiring a company that focuses on digital banking payments, that kind of thing.
Yeah. It seems like every bank is trying to up their game in that area.
Yeah, they got to keep up with the times.
Attract that younger customer.
Exactly. The younger, tech-savvy crowd.
Yeah.
So there are a lot of possibilities out there.
Yeah.
For Eastern Bankshares, the key is going to be finding an acquisition that complements their existing strengths
Right.
and helps them achieve those,
Long-term goal.
long-term strategic goals.
Yeah, that's what makes following Eastern Bankshares so interesting.
It is.
They're not afraid to be bold, to think differently.
They're not afraid to shake things up.
It's a reminder that even in, a traditional industry like banking,
You can still innovate.
there's still room for innovation
Disruption.
and disruption.
Absolutely.
Well, folks, that's all the time we have for today.
Yeah, that's going to wrap it up for this episode.
We hope you enjoyed this deep dive
Into Eastern Bankshares.
into Eastern Bankshares Q4 2024 earnings call.
It was a good one.
As always, thanks for listening to Talk Tickers.
See you next time.
And remember, do your own research. Consider your own financial situation and risk tolerance. And never invest based solely on what you hear on a podcast.
We're just entertainment here.
Until next time, stay informed and happy investing.